Welcome to TheoTrade. This is Don Kaufman. It is October 11th, 2016. We are taking a look at markets this afternoon with about 5 minutes left to play in the period and what can only be dubbed as the quiet sell-off. So why do I mention, is it quiet out there? Yeah. I mean, the S&P is, when was the last time you saw the S&P is down 30 handles? 30 points in a day. The volatility, barely climbing. Bonds, absolutely nothing. The bonds dead flat at 164. If there was one thing that stood out to me today is that the volatility products did not react as you would have expected. Now, I'll look at levels here in the S&P futures in just a moment. But when I talk about volatility products, though, not reacting, these are the volatility futures up 72 cents. Whoopee. It's almost like non-eventful out there at all. The VIX, okay? Sure, it takes off to the upside. You're going to say, it's a 16% move. It's nothing. We just saw a 30-point move after days of dullness out there. Moreover, if you look down towards the bottom of the screen over here, you look at what's called the VXST. That's the short-term VIX. All right, it popped a little bit. The VVIX, it didn't even hit 100. I mean, there's not even a fever pitch to the VVIX over there. But what is substantially more amusing is the fact that our levels that we've been discussing now for weeks, literally for weeks, we've been talking about specific levels. We drew the trend lines out there. We hit most of them today. So in the overnight session, we were talking about 2153. And again, these are levels that have been on the S&P futures and on our charts for weeks. We hit 2153. We came off fast and furious, stopped on a dime at 2143 when we proceeded through it. And this is one of the most important things that helps us in detecting particular levels. The levels themselves, okay, pertain to where there is massive risk and ultimately massive hedging activity. People are continually emailing me, how do you pull out the levels? I pull the levels specifically from watching intraday trade on the S&P futures and where there are volume spikes, okay, continuously at, again, not so much support and resistance, but they're levels that you can pretty much hang your hat on over here. When we come off from 2153, that we literally traded 2153 all throughout the course of the evening. We stop on a dime at 2143, okay? Volume explodes to actually break through 2143, clearly because there's a substantial amount of risk over there. We hug the downside of that. Okay, where do we end up ultimately on the trading day? Well, it wouldn't surprise me to see us close at another one of our levels, 2129. And I want you to see right here where we came down and we threatened 2129. It is a line in the sand out there. And when we did breach it, again, it had to be on monstrosity of volume. You realize we actually breached 2129. We traded 12,700 contracts 1 minute. So here again, we have about 1 minute left to play in the period with the S&Ps. They're going to end up on the day right at 2129. Now, if you're curious about levels, what I've been talking about on a day-to-day basis is that markets, they don't have much of a feel to them. They're trading kind of binary. That is, one day we're up, one day we're down, but we're actually trading simply from level to level. When I say a binary move, great. If we're going to have a binary move tomorrow, well, we're going to trade up to 2143. Or what's the next downside level? Well, next downside level, 2112. We come down to 2112, you're going to know it. We haven't been there in quite some time. In fact, take a look back over the last 30 days, and that's exactly what we're going to do here momentarily. Look back over the last 30 days, and I'll just zoom in. All right, downside levels. Obviously, here's the 2112. Here we are right now at 2129, stopped on a dime out there. But let's not just focus on the futures. And again, until otherwise, we're still in this kind of binary trading environment. One thing, hey, I think this is going to catch everybody's attention. However, tomorrow happens to be, a major holiday, but the markets are open. So it's Yom Kippur. Markets are going to trade. There's going to be FOMC minutes, and I'm sure traders are going to keep an eye on it that are not necessarily going to be at work. All right, clearly people can access markets from a variety of different means out there. Nevertheless, the volatility is rather low for tomorrow's trade. This is looking into tomorrow. It's with 1 day left, and the expected move is about $15, although that has increased substantially between, obviously, yesterday and today in the trade. Volatility is expanding out there. Nevertheless, expect a rather quiet trading session tomorrow. So the bell went off. We're just north of 2112. These futures will trade for an additional few minutes, of course, after the bell. Now, there's one thing, again, that really also catches me off guard, not just the fact that volatility is incredibly low. Again, I can only dub this as the quiet sell-off over here, but another area that stands out that I don't think traders are seeing too much, okay, unless you're looking for it, you might not notice it, the dollar. So the dollar is exploding higher once again, and this happens to be, again, last 30 days, but take a look at it in a little bit of a broader time frame out there. The dollar has possibly broken above and beyond, right, some recent highs. Now, I'm not big into support and resistance. Nevertheless, we're kind of trading on the dollar out in no man's land at this point. Okay, we broke a pretty key level to the upside. At the exact same time, we're going to keep our eyes over the next few days on the bonds, because the bonds are doing the exact opposite. So we've got dollar breaking. Okay, I mean, the dollar is just stone's throw off all-time highs. The bonds, well, the bonds, okay, this is pretty much their all-time high back here at 177. Nevertheless, they are forging lower in a big way, and where they're about to stop, and nobody knows, but it does appear that we may have a more substantial move now underway. We're going to get a little bit more action unfolding in the next couple of days, but keep your eyes peeled to the volatility products. Today, it was quiet. We sold off, but it didn't feel right. And that simply means there was no intensity to the trade, right? It was too quiet out there. Nobody felt the fear, and that's what you want to see, okay? This could be the beginning of much larger slippage that is a down move in the broader markets. Again, more to come as the week progresses, and this was a week, once again, that we didn't expect much. Traders are sitting here. Are you really looking to the election? Because the market's already beyond that. Think about it. With that, watch the bonds, the volatility as the week progresses. Yes, the FOMC minutes are out tomorrow. What don't we know? They might raise interest rates. They might not. We're all looking towards the December time frame for rates to appreciate to the upside. Nevertheless, the market's smart. It's going to get ahead of that. And if the market does see, again, rates that are going to increase, what's it going to do? It's going to sell off the bonds. We're already seeing the selling in the bonds. Does the selling in the bonds spark a broader sell-off in the S&Ps? Well, that's much more to come. Again, go back to your levels, look at them for a binary move tomorrow. You really have to start to consider back to the 2143 or all the way down to 2112. Look for it. Thanks, everybody, for joining us here at TheoTrade. Enjoy your evening. Bye-bye.